I am Dr. Divya Verma, Associate Professor in Guru Gobind Singh Indraprasth University, Delhi, and we are talking about a topic series called Fintech. And in today's lecture, we are going to discuss about what Fintech is. In the previous lecture, we have talked about the meaning of Fintech and what were the enablers of Fintech in India. Fintech is made up of two words, you can say, financial and technology. So in the Indian financial system, when technology has intervened, has enabled or has helped the financial sector, the financial system, the institutions, the product to become technologically driven. So that and those kind of innovations, so that had led to looking at this particular new sector of financial services called Fintech. We also have discussed about that, innovations are at three levels they happen. It's surface innovation, it's genuine innovation, and it is foundational innovation. So whenever these innovations were, whenever the financial, we could see that the financial sector was having so many innovative products and services they were coming up. And technology was intervening, and there were technologically driven innovations that were happening. But very recently, the word fintech has become popular. The main reason to this is that because now it's like everywhere these fintech companies, products, services are emerging. So they are coming in the form of clusters. And the level or the depth of these innovation is really genuine. So they are not surface innovations, but they are genuine innovations or foundational innovation, which will lead to a series of, there can be a spiral binding of these innovations that can happen, which will lead to transformation of the way how financial system has been working, how we deal with customers or the customer services which exist, and it will change the future of financial sector as well as the economic would lead to the economic growth of the nation. So in that light, if we look at the products and services which have come up, which are in the form of surface innovations, so peer-to-peer lending. So this is a kind of genuine innovation that has happened, which will have long-lasting impact on various other products and services that are available. Privately issued digital currencies like bitcoins. So there can be, they are also genuine innovation because they have changed the way people looked at payments. The existing method of payments, so it's different from that. So it is having transactions without a government-backed currency, without a trusted third party, and so it's a kind of genuine innovation. Some of the fintech innovations are further deeper. For example, distributed ledger technology. It is a technology that underlies Bitcoin. At its heart, it is a secure way of storing data that makes it largely unchangeable in the language of blockchains or the technology. With this technology, we can store information about a history of transactions in a decentralized way. If we think about distributed ledger technology in terms of the depth, it is a foundational innovation. For example, like double entry bookkeeping when it came, so it was a foundational innovation. Distributed ledger technology is not a product on its own. It will nowhere be visible, but rather it forms the underpinning on which various other products and services will be built. Bitcoin was the first product which was built on the distributed ledger technology. But many companies are currently developing products and services on distributed ledger foundational innovation. So one of the company built and is operating a blockchain platform is Nestack. It is using it to issue non-public share. Another company has used the blockchain to issue corporate bonds. Many fintech startups and incumbent financial institutions are developing proofs of concept for additional products and services that can be built on top of distributed ledger foundation. Smart contract is another such innovation. So there are computer programs that can automate the execution and enforce the satisfaction of conditions of a contract. If distributed ledger technology becomes prevalent, Smart contracts could be written onto distributed ledgers, thus automating a significant portion of the financial system. Smart contracts, like distributed ledgers, are not really any product on their own, but they are a foundation on which you can build other products. So once you introduce smart contracts, you open up possibility of many more innovations, like organizations run by a set of rules written on smart contracts, known as decentralized autonomous organizations. Now let us talk about the history of fintech. When did it evolve? How did it flourish, and where we look at it now? First, we'll talk about the historical evolution of fintech globally, because from US and other countries it has now come to India very recently. So according to a paper in 2015 published by Douglas Arner, Barbaris and Ross Buckley, The Evolution of Fintech, a New Post-Crisis Paradigm, they have defined fintech history in 4 different eras. They have defined it as Fintech 1.0 from the time period of 1866 to 1967, Fintech 2.0 from 1967 to 2008, Fintech 3.0 from 2008 till date, and Fintech 3.5, which considers emerging markets. If we look at Fintech 1.0 from 1866 to 1967, so Fintech, since the time when globalization happened, you could see that little bit of financial technology, so first stage of development started happening. Before the First World War, at the end of the 19th century, cross-border financial transactions became easier using telegraph technology. This was a time of building a foundation, which you can say, it was a foundation time for fintech. The US at that time saw completion of infrastructure such as first transatlantic cable in 1866, establishment of Fedwire in 1918, and the ability to conduct financial transactions over long distances with huge advancement in financial services. If we talk about Fintech era 2.0, which started from 1967 to 2008, so this phase of fintech history is characterized by the move from analog to digital in financial services, beginning with the installation of first ATM in 1967 in the world. The 1970s witnessed greater digitization of financial services with the introduction of NASDAQ and the first digital stock exchange, and SWIFT, which enabled communication protocol between banks that made large cross-border payments possible. And then global financial crisis also happened. So Fintech 3.0, which starts from 2008, marked the time when global financial crisis was there. It happened because of strong interconnections due to globalization. It was a US real estate crisis, became a global financial crisis. Moreover, while institutions were helping each other with people's money, people were losing money at that point also. Bitcoin was designed in 2008 and launched in 2009. And it was a kind of disruptive technology that came. It was fully decentralized. Trust was not required, which is usually required in financial markets. Now let's talk about Fintech 3.5 era. This is the current time. According to those authors, they said that fintech in emerging market is considered to be Fintech 3.5 age. And it's a different era. In emerging markets of Asia and Africa, fintech tended to develop later, but the growth is so fast, and all thanks to knowledge accumulated over time by those countries, and also because of different national policies, emerging markets are now able to gather more investment, create solutions that can meet the needs of both internal markets, like in case of unbanked, and needs of the global economy. Now let's discuss how fintech has evolved in India. So the history of fintech in India can be traced back to early 2000, when online trading platforms and digital payment gateways started to emerge. However, it was not until mid-2010s that the industry really began to take off and launch of several key fintech startups happened. So one of the earliest and most successful fintech startup in India was Paytm, which was launched in 2010 as a mobile recharge and bill payment platform. Over years, Paytm has expanded its services. It now includes digital wallets, online marketplace, and range of financial products and services like insurance and loans. There are other fintech startups that emerged around the same time like MobiKwik, FreeCharge, Oxygen, Wallet. These companies, they focus primarily on digital payments, mobile wallets, which were gaining popularity as a convenient alternative to cash. In the years that followed, the fintech industry in India continued to grow and diversify, with startups launching wide range of products including peer-to-peer lending, robo-advisory, digital banks. Then government policies also have played a role in the growth of fintech in India. For example, the Aadhaar system and KYC checks. So, looking at the timeline how fintech has evolved in India, in 1950s to 1970s, in India, first ATM were introduced, allowing for easy access to cash banking services outside traditional banking hours. In 1980s, the first online banking services were introduced, which allowed customers to access their accounts and make transactions through a computer. In 1990s, the rise of internet and e-commerce led to the development of online payment platforms like PayPal, Amazon Payments, etc. In 2000s, mobile devices became increasingly popular, leading to the development of mobile payment services like M-Pesa, Kenya, Paytm in India. In 2008, we all saw the global financial crisis, which led to the development of fintech as an alternative to traditional banking services. In 2010, fintech exploded in popularity, and now we can see how much we talk about fintech, and everywhere we see the fintech companies coming up, with the rise of digital wallets, peer-to-peer lending platforms, and robo-advisory services. So 2015, we saw the introduction of blockchain technology through the development of cryptocurrencies like Bitcoin. They brought a new wave of innovation in India. And after this demonetization happened, after demonetization, government popularized this UPI and India stack, and we were focusing, government intervention was more towards becoming cashless. So in 2016, the launch of mobile payment services like Apple Pay, Google Wallet, increased the convenience and accessibility of mobile payments. In 2017, the introduction of open banking regulations in the EU allowed third-party fintech companies to access customer banking data, leading to the development of new services and products. In 2020's COVID-19 pandemic accelerated the growth of digital payment, and we could see that there's so much of upsurge of people using digital methods of payment in retail sector. So in this connected financial ecosystem, if we talk about the main players, consumer takes the center stage. As users of fintech and traditional financial services, consumers are in the driver's seat of connected financial ecosystem, with their choices determining who wins and who loses. Fintech companies and institutions are always in the hunt of latest consumer preferences in order to fill market gap wherever they are detected. So consumer becomes the king. Consumers' willingness to share their financial data with third-party apps is also critical for the success of fintech industry. It's all our social media data, all our personal data of consumers, which these fintech companies are using for AI purposes, and then they are judging that what will be our next move towards our purchase behavior, our spending behavior, our investment behavior, and what things we like, do we buy impulsive things, and all such stuff they are able to do only with the financial data which we are able to share with the third party apps. It's up to the fintech and financial institutions to prove their trustworthiness through transparent policies and high standard of privacy and security that will gain the confidence of consumer, and consumer would be ready to share and use these platforms in a bigger way. Financial institutions are also main contributors to the development of fintech, and the depository accounts they provide to consumers are the center of this ecosystem. So holding core account data like balances, transactions, primary account for payment, deposits, financial institutions provide raw material for fintech to work with. That's why many fintech apps are built connecting the existing banks rather than displacing them. So many times we could see that fintech, has is creating a kind of cooperation and is working together with the banking institutions so that both of them can have advantages of each other. So they're creating new ways of budgeting, investing, lending, paying, and other financial services. Then third important player are these fintech startups or companies which are emerging. In this connected financial ecosystem, third-party providers these fintech firms are non-bank providers. They offer products or services which directly leverage customer data and other services consumed from account holding institutions. And they are based around APIs, bilateral connections through any intermediary. So fintechs leverage bank account data through APIs, but through other means also to make financial products and services more digital, more accessible with improved user experience. And they can provide from cryptocurrency trading to tools that help pay their student loans. The possibilities in this world are endless with respect to what kind of fintech companies can emerge, what kind of product and services they can offer. And fourth important enabler is data networks. So data network again go as the underlying thing. They are lesser known players in the ecosystem, but potentially they are most important. They are the glue that hold all of these connections together. There are thousands of fintech apps and services and tens of thousands of financial institutions, making it virtually impossible for developers to build one-on-one API connections between all of them. So instead, what fintech applications or apps do, they turn to data networks that have already built these connections. By connecting with a data network that has pre-existing API with financial institutions, fintech apps instantly gain secure access to the latest account after the user gives the permission. Likewise, financial institution can also rely on these data networks to provide customer access to fintech apps. So what are the four pillars of fintech success in India? Entrepreneurship. There are disciplined companies that have clear quantitative value proposition that stand a better chance of success. They are coming up with newer business models, newer products and services they are offering. Technology is another important pillar. So the opportunity of AI, machine learning, natural language processing, advanced sensors, robotics, all of this, computer related tasks which are technological driven are an important pillar for the success of fintech industry. Domain knowledge, how much we have grown in the area of finance, is most lucrative, arguably one of the most complex sectors of the economy. Startups without deep knowledge of the industry cannot survive and exist, cannot provide a credible solution. Then we have policy and regulation. As there are government regulations which play a significant role in finance, and this financial system sector is all governed by the regulatory bodies. So you can't do fintech and ignore the policy or what regulator is saying. So regulatory bodies are also an enablers, have led to the development and growth of fintech in India or any other economy. So what are the three important Ds of financial technology or fintech companies? First one is digitization. Fintech leverages advanced financial technology to empower businesses and consumers to make more control over financial aspects of their life. And all of this is happening because of digitization, which is driven by smartphones providing all basic financial fintech technology available on a click of mobile. So digital technologies which are driving fintech, they include machine learning, artificial intelligence, predictive behavior analytics, data-driving marketing and automated customer service technologies like chatbots, all of which expedite financial services to consumers and reduce operational cost for business. And the market is growing. Global spending on digital transformation has reached $1.3 trillion in 2020, and every year they're growing by 10.4%. Decentralization is the second important D. When we look at, unbundling conventional financial services like mortgages, investments, business loans, individual offerings, fintech has improved access to these services. It has led to financial inclusion and have led to people reach out to unbanked or underbanked sector. Third important D is disruption. So this digital technology and decentralized services have have upended the traditional way of accessing financial products and services. They have caught attention of private equity, venture capital firms, and there are investment fundings which have come at great record level. You can say that surging from 169% from 2020 to $131 billion in 2021. Now, you have all heard about these names of fintech products and services. In various sectors these exist, and maybe we'll just understand these brands which you every day read in newspaper, on billboards, on social media. You see these. So there are banking and payment products and services which are offered by banks, like digital banks. So we have names like Neo, Kotak 811, Digibank by DBS. Then there are payment platforms like Paytm, we all have heard about it, PhonePe, MobiKwik, Razorpay. So they are all fintech companies. Under remittances, we have companies like InstaRem, Remit Guru, ExtendPay, such names. If you look at the investment market, what are the fintech companies available? What are the brand names available? Under robo-advisory category, you have heard about Scriptbox, Grow, Kuvera, trading platforms like Zerodha, Upstocks, 5paisa. They are becoming very popular nowadays. Mutual fund companies like Paytm Money, ET Money, MyCamps. So now looking at these names, you can relate with that, okay, these are the companies which are known as fintech companies. Lending, under the peer-to-peer lending category, we have companies like FairCent, Lendbox, I2I Funding. Digital lenders exist in India, for example, brands called MoneyTap, CreditBee, Early Salary. There are personal loan lending companies like Credi, Cubera, LoanTap. In the insurance sector, we have, so they provide digital insurance, health insurance, life insurance. And we have popular names like Policy Bazaar, Plum, Aegon Life, Bharti AXA, HDFC Life, such brands. So when you look at the fintech companies in the wealth management sector, we have digital wealth management provided by Paytm Money, Scriptbox, alternative investments provided by Liquid Loans, I2I Funds. And then there are blockchain-based investment companies like PrimeChain Technologies. Now, what are the most important talked about fintech trends in 2023? Few important terms which you will come across every day and you will hear everywhere about fintech, and you should know if you want to keep yourself updated with fintech changes happening. Terms like green finance, blockchain technology, embedded finance, artificial intelligence, digital banking, regtech, smart contracts. Now, what are these? So, green finance, when we talk about, it's about managing environmental risks, planning for future, aligning products and services such as loans, investments with environmental sustainability. So, anything which is sustainable to environment, is termed as green finance. Blockchain technology will be talked about a lot. A lot of innovations will happen around it in 2023, that's predicted. So if something is referred to as electronic ledger or distributed database where every transaction is recorded and there is a distinct block connected to a prior block in the network. Embedded finance. Now, embedded finance, it provides an open API framework to non-financial companies to seamlessly integrate their web and mobile applications with complementary financial service offerings. So, you have heard about buy now, pay later concepts. It's a unique form of embedded finance which is rapidly expanding in India. Artificial intelligence, AI, is being talked about a lot in the financial world. So, fintech companies can fight cybercrime, money laundering, frauds by using AI to augment chatbot engagements, customer-centric client care, drive infrastructure choices, and with respect to loan issuance, negotiation, fraud detection, you will see a lot of AI-related applications will emerge. If we look at digital banking, so digital banks have been initiated. They provide various useful services. For example, international payments, contactless MasterCards, P2P transfers, tools for managing expense, reviewing your balances. They provide crypto-friendly payment options. So these digital-only banks are becoming more popular, more profitable globally nowadays. RegTech. What is this term? RegTech has, its regulatory involvement in technology. It has evolved to assist business in streamlining almost every step of compliance process. It will advance, provide solutions to help financial institutions identify, mitigate risk in times to come with the use of cloud technology, machine learning, and big data analytics. Smart contracts also are going to be very important in development of fintech in times to come. So it enables parties to sign documents that are represented in computer language using digital signatures. Cryptographic keys is the key, and you will find that smart contracts will become the more legitimate way of entering into a contract, and breaching it would become next to impossible. So you would see it will bring a fintech movement in and a lot of more innovative products and technologies around it. So if somebody requires a mortgage, so instead of going to a bank, customer can get loan from a bank based on smart contract and receive the funds in few minutes or lesser time using these fintech apps which exist. So we can say that fintech industry in India is rapidly evolving, and we can expect to see more innovative products and services being developed to cater to the changing need of consumers. So in today's session, we have talked about how fintech has been defined, how it has evolved, its evolution in the world, its evolution and how it has grown in India, what are the enablers, who are the players in fintech industry, and what it will take to the fintech to grow and expand. So that it's a time of fintech, and you will find everywhere there is the kind of entrepreneurship or new startups which are coming up. They are all coming up in this sector. So proper knowledge of finance would enhance everybody's understanding about why these products exist. Are they useful or not? Whether these products are going to be beneficial for the customer or not. And we can see that whatever growth is happening is just because of we are a largest consumer market which exists, because of which the fintech has grown so much. So thank you so much for paying attention. If there are any queries, we are available on the under mentioned numbers, and we'll be happy to answer your questions. That's all for now, and we'll talk more about fintech in later lectures. Thank you.